Definitely. Yeah. Just because you see other tools that have come into practice that now seem obvious, but they weren't. Like nurse hotlines were not always a thing. Now they are widely adopted and feel bespoke to the work comp industry. And so tools that work will become widely adopted.
Hi, everyone. Welcome back to another episode of the Frontline Advantage. We've got a scorcher today. I'm in London and it's 95 degrees, so please don't mind my sweating as we continue this episode. But I'm so excited today to welcome Calvin Gilman. Calvin and I met at Generator in Minneapolis in 2019. Generator is an accelerator program based in the Midwest that serves startups all across the country and perhaps even global now. Calvin and I have been in touch around actually providing insurance coverage for Teamforce, at the time ClickIt, and now Teamforce. We utilized his services prior to the pandemic, stayed in touch during that time, and then now with Teamforce have begun utilizing his services again. He's not only helpful for helping provide insurance coverage for Teamforce, but he's someone I look to for advice around the insurtech space, things that he's seeing. So I'm super excited to have Calvin on today. Welcome, Calvin.
Vivek, thanks for having me. I'm happy to be here. Just the growth of your business and how you've adapted. And, I'm always happy to talk insurance. I think most business owners look at it as like a line item or a pain point that they just have to deal with. But as you've moved more into like the insurtech space, we really get to talk deeper on some insurance topics.
Why don't you tell our audience a little bit about what you do?
Yeah, so I am a commercial insurance broker. I think a lot of people view that role as a sales role. For me, I view it more as an advisory role, an expertise role. So I have a relationship with multiple different insurance carriers. You could say Travelers or Hartford, along with wholesale brokers who have access to markets that are not directly accessible by retail agents. And I present the risks, the businesses such as Teamforce, to the carriers. They provide quotes and then I give them to you and you purchase them. And rather than viewing it as a sales role, I view it as I can bring you options and then try to distill and explain what these large legal documents are, because that's what an insurance policy is. It's a legal contract between the business and the insurer, but there are hundreds of pages. And so I try to distill that into something a little more condensed for the businesses I work with.
The challenge that we see in the market today is that a lot of these mid-market, and I know, for the record, for those of you thinking about Calvin, Advance Insurance Agency, right? Mm-hmm. SMBs, nonprofits mostly, right? Is the target?
That's my target. Yeah.
Yeah. So if you're one of those, which, today, we're still in that zone. But as you think about the mid-market and enterprise landscape, where in the US, 90% plus roughly of the Fortune 500 self-insure their workers' comp and health insurance. 75 to 80% of large employers, say 1,000 employees or more. And so, what that means is above first aid, below stop loss or catastrophic. What we're trying to do with Teamforce, and getting your take on this, is kind of go from lagging indicators, the formal claims that come up and that see increases in what are called the XMODs or the EMRs increase because companies are having to deal with too many claims, people going to the hospital, getting paid out for that. The average workers' comp claim cost in the U.S. Around $47,000 or so. So we're focused a lot on the leading indicators. And as I showed you a little bit about the type of work we're doing, I'd love to get your take on this market and some of the advice you have on where we should take this. But what is your take on this idea of saying, okay, instead of relying on lagging indicators, which are still important for formal proof points, let's look at leading indicators, specifically things in people's heads that they're maybe not revealing through other types of channels you might have come across, compliance hotlines, suggestion boxes, camera systems, all the things you're familiar with. Do you see an opportunity for these leading indicators to actually help companies reduce their risk, especially for those that are self-insured or part of captives?
Any tools that a company can utilize, whether it is front-end more employee training, or something like Teamforce and trying to use technology to get leading indicators of employee behavior, or whatever it is, all those things are going to be useful. I think the challenge you have right now is just getting more case studies of it working, because anytime where you're targeting leading indicators, it can be difficult to prove that was the needle mover, right? And so one of the best pieces of advice I got early on in my career was the best promise of future success is examples of current success. And so I believe in preventative care in all things. And I think businesses understand the value of prevention. As you can see, the growth of employee training positions and how we prep people for their first day of work means that I think you have HR managers or COOs who are aware of the value of looking at preventive causes of both risk or efficiency or anything that they are trying to get ahead on the front end, even without a direct reactive implementations are more obvious of people keep jamming their finger in this door. Let's fix that. Those are obvious cause effect fixes. But preventative leading indicator, working ahead, all of those things makes sense. It's just you need more case studies so that you can show the value, because there's also the cost. And I think that's where you find barriers, and that's where I find barriers is this is going to take implementation. This is going to cost us both time and money. Do we want to jump in and do this without with this nebulous pain point that we have? I think that's the greatest barrier in general that you have of implementing preventative measures.
Yeah, so you brought up a couple of things there. One was around proving a negative if something didn't occur because we caught it and therefore we helped prevent it from happening. So the direct attribution to say, hey, that should be attributed to what we caught, not otherwise through all the other practices that may be occurring within the organization. The way we like to set up an experiment like that is to say, how many signals are you currently capturing through your existing mechanisms? A signal being defined as a safety risk, something related to quality, continuous improvement, basically something that can be acted upon or improved, not just a complaint or a trolling comment. And so the first order is saying, okay, are we capturing more relevant signals, which goes to your second point, which is, you were talking about people jamming their finger in the door. Now that might not be a problem to vocalize to a supervisor, but if there was something where I was told, hey, don't go in overtime. Hey, I need you to meet a production goal. I need to start taking a shortcut. I need to start doing a workaround. When I start doing those things, where's my place or space to vocalize that I'm doing that? Because if I say something, I might lose my job. And if I don't say something, maybe someone gets injured. Maybe there's a defect that I see in the actual product quality. And so that the challenge that we're trying to solve there isn't just the leading indicator itself. It's the psychological safety to say we are capturing with proof more signals than any other human generated channel. And those signals, when caught, resolved, verified, and then tied to an economic number and impact, are materially different than what exists today. We're about to run this frontline risk study that is going to be live when this episode is live. And one of our theses of this is that everyone knows underreporting is prevalent. You talk to EHS professionals. I wish we got more safety observation reports. I wish we took safety more seriously. I wish we got, we did better to reduce our XMODs, our EMRs, our TRIRs. We'd love to reduce workers' comp. We care about safety. You hear it all day. If you try to get at the root of why, and this is our thesis on the why, is if I'm an employee, what benefit do I have to report beyond, please go submit a safety observation report? Yes, I'm going to work each day. I want to get home safely, etc. But the issue is not just that it's cumbersome and there's a lot of friction. It can be tied back to me. It's when I report, there's nothing that ever really seems to come of it. The same reason the effect people feel when they take a survey. They take a survey, they're like, you got data from me. What did I get back about it? And so when we talk about this verified fixes component, this is the part where we say, okay, when you've gotten that feedback, you discussed that on that weekly huddle meeting, we now need to ask the workforce if that change has occurred. If that machine guard has been installed and it's safe to use now. Do we now know who the correct person is to go to in case of some kind of issue that happens within the org? Can we verify that the manager is now walking the floor, even though the company said he or she would be doing that? That's the attestation. That's the proof. And that closed loop is what we see is actually the differentiator for reducing the downstream issues that might occur. Because once you have workers actually validating issues have been resolved and they're testing, they're saying, you know what, it's now safer here. Logically, it makes a lot of sense that you see a reduction in your claims data. But beyond the claims data, our argument extends to quality, to continuous improvement in production, even on the employee engagement side. So that's a little bit of how it works. But I'm with you today. We're early stage. We have some really compelling initial proof points. We need more proof points. And our probably number one biggest challenge today is simply getting more first meetings, because you and I know in this space, it's pretty conservative. It's pretty much show me the data. Nobody wants to be first. And so how we're thinking about it, and I think you had some good ideas related to this, is not only target companies in pain, but target companies that are culturally ready and have the awareness and actually recognize the problem, but realize there's a different or better way to solve it potentially and are open to that. That's where we seem to thrive and do well. But I would love to hear your perspective on, you see a company like Teamforce, it has something differentiated, it has some initial momentum. What do we need to do from here?
You touched on it there, where reaching companies at a purchase point, and that's true for any business, right? You have to reach your customer at the right time. The other difficulty I see is companies that are experiencing this pain, right? Like high XMODs or anything related to high claims means they're also paying more for insurance. So it's like, hey, I understand your work comp is now 80% higher than it was 2 years ago. You should also pay us to solve that problem for you, right? They're already experiencing financial pressure. And so catching those customers makes sense, but it also just makes sense to target the correct industries, because there are industries where the owners, while their business may not be experiencing this pain point, understand that their industry is at risk, right? And so they go to conferences and meet with, they network with other businesses that are experiencing that pain point. They're not yet. And I think there will be those stakeholders who are smart enough to know that it's not because they're so great or doing the best things. It's because they're lucky. And so they have the means to be proactive today and they are scared enough of what could happen because they just left a conference where they heard, 30% of their peers are experiencing this pain, and you can help prevent that from happening. I think that's where we've talked about is targeting. It's industry targeting that are aware of this pain point and have this pain point. And then maybe it's not the customers who have already, just because of the financial pressure, right? Because when these things go bad, it means they pay. And it just, they pay not just in employee pain, but in dollars. And that's the hardest time to get companies to invest when they're already experiencing financial downward pressure. So I think that's like it. And then once you have that reputation that it's like, look, when you've used Teamforce AI, XMod has improved, premiums have gone down, whatever you're paying for this technology solution is less than whatever you're ending up saving on the back end. Really, the baseline is on your work comp cost. Your growth then that should put you on that upward trend that you're looking for.
Yeah, and I think you're hitting on something really real. So when we first went to market, we said, why don't we target companies that have had OSHA activity recently? And they might be in pain. It doesn't mean they really want to solve the pain. In fact, they might be in crisis mode and they might be defensive. I think what you're describing is companies that care about dollars and cents, but companies that are also proactive and realize the importance of being ahead of issues rather than waiting for them. And so captives come to mind so well, because captives are all about pooling together to save money, and they also tend to hold one another accountable and be more proactive by nature. And so that's leading us in that direction with captives, which I think you're really validating for us on the go-to market. And on the financial side, so we've got a simple EBITDA protection model that we've built and hosted on our website. We allow companies to post their annual workers' comp, their net profit, many of these being industrial businesses. They won't know how much our program costs, but we can estimate different numbers in there. A target claim reduction percentage, maybe anywhere from 10 to 40%, and then what the net cash savings would be. And so before we even go live, in fact, often in our first or second deck with a prospect, we will actually try to understand these numbers. And and this is an overall investment amount, but we could be talking about looking at it at a site level, higher risk sites, or based on headcount at those sites, and pricing it accordingly in a way where there better be pretty clear returns based on attribution of saying, we're going to reduce your workers' comp, we're going to reduce your claims. Because that is really what it comes back to, is show me the money. So I think that point you bring up is really important, and it's something that is not, it's actually a part of our you call it the sales pitch, but it's important to understand the numbers. That's the ROI. That's the CFO's case. The COO, somebody on the safety side, they have to make sure their leadership team, their people are ready, culturally ready to go execute on this. What is your perspective, Calvin, as an agent or a broker, when you see a tool like this? Is this a threat? Is this an opportunity where you differentiate yourself? Is this cool? Doesn't really affect any of my clients, and I understand your client type, but say you're dealing with large enterprise or some examples you gave. What is your initial reaction? I think you had some really interesting insights when we talked about this last week.
Brokerages and carriers have their own tools, right? And so when an agency is going to go in, a brokerage is going to go in for their renewal meeting with a middle market large manufacturer, they're going to bring a team of people. And if work comp is a pain point, they're going to have however long they've been a client, they're going to have those years of data. They're going to look at their claims, their XMod. They will oftentimes bring the carrier in that also has their own tools. And so using an outside vendor, your tool's going to have to be better than what they have. And especially today with the emergence of AI, and all these companies think that they can build tools in 2 weeks. So they're maybe more reluctant to engage with an outside vendor, at least the carriers are, because the carriers have, they're giant companies, right? These large companies are Fortune 500 companies themselves, right? Like Travelers or Hartford. And they want to retain as much business as they can. And they do that by having bespoke tools, and they're trying to build this out themselves. But both captives and brokers like myself, our objective is to retain the client and make the client happy. And so if we can present them with solutions, whether it be like, oftentimes the meeting comes down to what's my insurance bill for this year? I want it to be lower. And if we can come to them with tools that either make that happen now or promise a relief of that pain point in the future, agents are, that's our job. And a lot of agents, and I talked about this in the beginning, is where they view their role as sales. Agents still, at the end of the day, the bottom line and what their client is paying in premiums matters. Because if you're paying too much, it doesn't matter how useful of a resource you are, how good the conversations are, you need to get insurance for as cheap a price as possible while covering what you need to cover. And so if there are tools that exist to help agents achieve that goal, they'll use them because they want to retain the business.
Makes a ton of sense. So do you think what we're doing, and not necessarily just Teamforce AI, but the type of offering we provide and the focus that we have, is it inevitable, whether it's us or someone else?
Definitely. Yeah. Just because you see other tools that have come into practice that now seem obvious, but they weren't, were like nurse hotlines were not always a thing. And now it's like, how can we reduce claims from being catastrophic claims to, we want to shorten the time that person is away from work. The adjusted labor options for people who can't do manual labor, and how do we put them into something where we're not paying their salary for an extended amount of time while they're recovering from a torn ACL. Those things haven't existed forever, but once now they are widely adopted and feel bespoke to the work comp industry. And so tools that work will become widely adopted.
Related to that point, you talked about people being away from work. We were on with the CFO a few months back, and he said, Vivek, I think our first order of business is to tackle fraud, meaning people go have the claim, they stay out of work too long before I even consider wanting to implement something like this. I mean, I spoke with my father, who's a physician. My father said, the biggest cost, fraud might be an issue, and I'd love to hear your perspective on that. But from my father's perspective, it was the fact that somebody even went to the hospital in the first place. The ER was there for the first day or two in that hospital. That's actually a bigger cost than somebody being out of work, maybe a little bit longer due to an injury. Is fraud an issue in the industry in the sense that it's big enough that it's not negligible? Is it getting better, worse? Is it irrelevant? Was the CFO right to point to that first?
It is an issue, and it's an issue. Interestingly, the cost of medical care is high, but carriers and the way XMODs work is that time away from work is a bigger factor than like medical only claims. Medical only claims are treated in a different bucket, and it is it's hard to identify what causes fraud problems for companies, right? It can be company culture. Some people believe it's like where you're based. I think it kind of has an impact. Both of those things matter, but really what it is it's employee incentives and like financial pressure. So when the economy gets worse, fraud goes up. What people are going to be, and I just kind of believe this in general, is that people are self-interested, and that's not wrong. It's like, that's just human nature. And so as financial pressures increase or economic pressures on individual employees increase, fraud is going to increase. How you manage that, like, there are companies that hire private investigators and their whole job is to follow people around and confirm whether or not they're engaging in work comp fraud. That is expensive. It has a human element, and there's a big degree of subjectiveness in terms of how hurt are you, how much can you work. And I think trying to combat that is important, but there are so many factors that impact fraud that, and again, it might not be fraud. It's like, how incentivized is this employee to come back to work, right? Are they actually a criminal, right? And because when we use the word fraud, people think of intentionality and they're trying to exploit the system, but it can also just be like, I hate my job. I don't like working there. It still hurts. So I'm just like, I'm not going to try very hard to come back, versus I love my job. It still hurts. I'll
or it's
tough
still
it out.
Unsafe. I got injured in the first place. Why do I want to go back to somewhere that's injured if it's not actually going to change?
Right. It didn't feel like my fault. I feel like they're constantly putting pressure on me for performance goals, but they don't care about whether or not like I'm comfortable at work and safe at work. And so company culture, I think, is such a big factor, and it really depends on, I don't know who the CFO was, but I think sometimes pointing the finger at others is easier to do than like, what can we do to not create that deviant behavior? It's like, think about it, like, if they're going to be selfish. And people want to work. I believe people in general want to work. So as long as I think that looking at it as a problem is really just trying to point the finger instead of being introspective of why is this happening?
It gets back to that cultural readiness. Are you really ready to embark on this journey of getting the most out of your people in a positive way? LNS Research actually did a post about this, which I found to be interesting. Just in the past couple of days, Allison Kuhn had written that, the future of industrial work won't be defined by replacing people. It'll be defined by what they can do when they're better supported. And that the number one business objective for frontline operations across their entire study of manufacturers was increasing workforce safety, quality, and productivity, which is really what we do. Not cost reduction, not automation, people performance. Seems so odd to hear this in this era of AI, but really utilizing AI to kind of get the worker at the center of it and to do more with them around safety and risk management, which is what we were just talking about. Servicing early warnings, flagging deviations, reducing the burden on people and staying safe on a fast-moving floor. There are, of course, things around workforce management skills. There's been a lot of talk in the country around that. And then knowledge management, where you have this previous generation maybe retiring from manufacturing and then taking the skills with them that haven't been properly transferred to the next generation. But, I just thought it was so interesting to see increasing workforce safety, quality, and productivity is the top business objective for frontline operations across all manufacturers surveyed. So, hopefully that is the case and true. And if it is, really, we hope what we're doing is inevitable. We not only hope we are the company that can win the market and to create that impact, I want to thank you, Calvin, for coming on. Is there anything else you want to share today about what you do, what you've learned about Teamforce, what you're seeing in the market with our audience?
I mean, I hope so too, because my favorite part about insurance, or my topic that I like most often, is about risk management. It's not about buying an insurance product that really it's a bucket of money that responds when the bad thing happens. We can talk about risk, and insurance is a piece of it because some things are not preventable, but preventative risk management policies are make everyone feel better. That's better than getting sued. And so I'd love to see growth in this area. And just the pitch for me is anytime anyone wants to talk insurance geekiness, I'm always down to talk.
Love it. One more for you.
So
with this complexity of humanoids, autonomous vehicles, say these things get into an accident and they were in autonomous mode. I mean, Tesla, FSD, there's already some of this discussion going on perhaps with investigators, and not to single out Tesla in any way on this, but like imagine you're in a factory, there's a humanoid robot, it goes around, it injures a machine, it injures another human being. Maybe the human being, stepped in front of the humanoid. Maybe the humanoid, just did something on an edge case. Do you think all that's going to create a whole new set of complexity and can of worms in the risk management insurance space that we're not ready for yet?
I mean, the liability of autonomous machines is interesting because AI in anything, it's the same. I think we are potentially at risk of creating a similar problem that we did with the internet, which is we want this industry to grow. And so the Communications Decency Act was passed way back when the internet was new. And it took liability away from internet companies. We're seeing a pain point for this now with data aggregators. Where does your responsibility lie? And having that law in place allowed Google and Meta and these companies to exist and then grow. That was important, good for the economy. But now, without having restraints there's question of what expectation of user safety and responsibility is now placed on these companies. I think most people wish there was a little bit more expectation of liability and customer safety. And I'm hoping with AI and autonomous machines, we learn from that mistake. And it's like, yes, there's useful applications here, but let's not just completely unleash the reins in the interest of economic growth, because I think that caused some knock-on problems with the internet.
It sounds like it's an interesting, exciting time coming up for risk management. So, hey, Calvin, this has been awesome. Thank you for coming on Frontline Advantage, and excited to just continue to learn more from you and do more together. So thanks again.